What is up, everybody? First trade recap here in a while, and we're going to get into the loans that I took today, and we're also going to get into another pair of loans that I called out in the Discord. Unfortunately, I wasn't able to take them because I missed my entry, but I called out these loans from here, and I'll draw out your tool. These loans from here, targeting here, and then I took these loans from somewhere around here, and I was targeting here. Now you see we did eventually go take out that target here, but I got stopped out after trimming one contract here. As you can see, I trimmed one once we hit these highs, and got stopped out the rest at break even here. Well, this is a really small, I think I was like maybe there. So let's get into these trade recaps. So to start things off, 9:30 we did absolutely nothing. But what should you already have on your chart before 9:30? You should have your draws on liquidity. You should have an idea on where price is going to go. Here at 9:30, we just chopped around, and what I was looking for was a manipulation higher to go lower. My bias was wrong, and we ended up manipulating lower to go higher, which there's no problem with that. If you're wrong, you're wrong. Just adapt and adjust. We manipulated lower and then went higher. So let's break down this first trade here. So as you see here, I had this marked out before the market opened. I had these equal lows marked out. These are equal lows on ES. So I put equal lows. I made sure to put ES here so I know these are equal lows on ES. When I saw we had these equal lows here on ES, and we immediately took this out. And how you know a good IFVG if it's a V shape. So you see we have a V, and then if you drag that over here, this is a V-shaped IFVG. IFVG stands for inverse fair value gap, and I'll break that down here. So here you have a bearish fair value gap. A bearish fair value gap should support price lower. When you see price reprice with speed through a bearish fair value gap, that means that the properties or the order flow has switched. So if this bearish fair value gap isn't supporting price lower anymore, we call these inverse fair value gaps, and it should support price higher. So now the properties have flipped, and I would be expecting price to tap into this gap and continue to deliver higher. But another thing about this fair value gap, and this is a very important thing that you'll see me use a lot in my trading, is this is your first presented fair value gap, which is the most important PD array printed throughout a New York daily session. And your first presented fair value gap is going to come in between 9:30 and 10 a.m. So here, your first presented fair value gap, long to short, basically is just your intraday bias. If you're below your first presented fair value gap, pairing this with your narrative, you want to be looking for shorts. If you're above it, you want to be looking for longs. Here, we took out our liquidity. We closed above here. So what's happening? I'm looking for longs since all the targets have been hit here. We did have another target here, but these are equal lows. Equal lows are nice draws on liquidity because there's a lot of liquidity resting there. So we took out these equal lows, and then we started disrespecting bearish PD arrays. So now I'm looking for longs. Another key thing I always use is my key opening times. I always have midnight Eastern marked out, 8:30 Eastern, and 9:30 Eastern marked out. I'm not going to get very deep into detail today, but rule of thumb, if you're below these key opening times, you want to be looking for longs. If you're above, you want to be looking for shorts. So if you were to take these longs here, I'm not a breakout trader. I'm a retest trader. So I always wait on a retest. If I don't get a retest, then I just get no fill. But I always wait on the retest so I can get a little bit better of a stop loss. But here, we'll put our trade in here. And we'll be targeting these highs here. And I am in replay mode just so I can show you guys the trade. So here you see we wick into first presentation. And if you wanted to wait on more confluence and you don't trust this, what can you expect? You can expect that price is going to do what? React out of this fair value gap. We reacted out of this fair value gap, so you can take your longs anywhere in this candle wick here until we take out a swing high. So until we get through here, that invalidates this idea, because once we go through here, we should pick up speed. So I'm gonna drag my stop loss here, exit out of that, drag my take profit, drag my stop loss. We're gonna confirm. So now I have my entry here. And as you can see, we run straight to TP. And this is a pretty simple trade. There wasn't much thought to this trade, but if you do want to see my thought process throughout this trade, you'll see the recording at the end of the video. Then for the second longs that I took, so what am I looking at here? I see that we have equal highs here. We have Asia kill zone high here with another swing high here. So what am I seeing? Equal highs there. A big thing, if you join the live streams, you'll see is I'm always talking about expansion retracement. Expansion retracement allows smart money to align themselves with the algorithm. So the algorithm is always going to hunt retail traders and align with smart money. Well, smart money is going to align with the algorithm. So here, for smart money to align, getting in long here, smart money is not engaging in price action while we are above the 50% because we are in the premium of the range. Smart money is only engaging down here in the discount. The algorithm knows where the premium and the discount is. Smart money knows this as well. So here, and you'll see it in the recording, I marked out this fair value gap here. Why this fair value gap and not this one? First presented fair value gap could have been used, but it wasn't. But it was already inversed. This fair value gap was unmitigated. Unmitigated meaning there was no action in this fair value gap. Nothing had tapped into it. It's been unfilled. So that means that this price action has been delivered inefficiently right now. So I'm looking for this level here to continue higher. And I showed you my executions at the beginning, so you know that this was an actual trade that I took. But I had my limit order for here. And how I trade on the 5-second chart a little bit to get a little bit more of a precise entry. But here we expanded higher, we retraced lower. So I'm looking, my eyes were already here and you'll see it at the end of the video. Here we tapped in and what happened? We mitigated the entirety of the fair value gap. So my stop loss goes behind the 3-candle pattern. 3-candle pattern is there. Stop loss is there. Take profit is there. And what am I looking for now? I'm looking for displacement higher. So we'll go fast forward a candle and we look at what happens. We mitigate this here and what happens, the candle body stay outside of this fair value gap. Go ahead and get rid of that there. Again, what happens? We test back into this bullish fair value gap, but the candle bodies stay completely outside of it, showing me that the algorithm does not want to reprice lower. The algorithm is using this to reprice higher. Here, ES came up here and took out this high. So what did I do? I dragged my stop loss there. Fast forward one more candle. We have this swing high here. So I'm only in one contract on this test account, on this replay mode, but I was in multiple contracts on my actual account, and this is where I trimmed. So this was my trim and break even here. So just for the sake of the thing, I trimmed right here. Once we tag that level, I trimmed there and I moved to break even here. And what am I looking for throughout this price action? I'm looking to see, are we respecting or disrespecting bearish order flow? So here, the algorithm knows where the wicks are. In the replay, if you stay and watch the entirety of the video, you'll see that I spoke about the 50% of this wick here. I wanted to see if price was going to close above the 50% of this wick here. We had the 50% of this wick here, and what happened? We bounced off of it. We fell back down. Then we had the 50% of this wick here, and what happened? We closed above. So at that point, I trimmed here because we should see speed. We should see speed in displacement. But we also have to have one other thing. You can't get blinded in what you're watching. Here, what do we have? A bearish fair value gap. As I mentioned here before, a bearish fair value gap should support price lower. Now, since I'm bullish, I want to see us continue through it. But a bearish fair value gap, in theory, is always going to support price lower until it doesn't. And then here, I got stopped out at break even after trimming one here. But that's why I always talk about paying the trader. So if you were to take the longs here, longs from the first presented fair value gap up into this drawn liquidity, that's 156 points. I called them out on the live. And if you were to take longs from here, trimming here, targeting there, that's another 72 points. So today you had 250 points easy if you applied yourself, traded, things like that. So what I'll do now is that is the trade recap. Those are the only trades that I took today. So those are the only trades I'll review. What I'll do is after this, if you want to watch, if you want to stick around, I'll post the full raw thoughts and breakdowns of me entering the trade, exactly what I'm saying, what I'm looking at, what I see, what I'm analyzing, what I'm marking out, things like that. So that way you can use that, study it, and basically do a little homework and deepen your knowledge of the markets. All right, NASDAQ is inverse this gap here. So this gap right here didn't hold. We got no more, I don't think. You got to go way back yonder to Timbuktu. We got one gap right here that we're already kind of pushing through. Looks like we tapped the CE of it to the tick. I didn't quite see it, but yeah, tap the CE of it. Yeah. So let's see what's going to happen here. We got our first presented fair value gap here on the 1 minute, un minuto. And we tapped the, I was going to say we tapped. No, we just created. Look like price is ready to go lower without giving entry. No, don't do it to me. This isn't a previous day low. I don't think that's important liquidity anymore, actually. Yeah, that's not. Oh no, it is. So we got some sell side here. We got some sell side here, and here. Cause I know the smallest voices, they can make it major. I got my boys with me. This price action just dumping on down. Got a fair value gap here, but these already been, the 50%'s already been mitigated. Let's see about this one. Yeah, 50%'s already been mitigated. I really like to see us like turn around here. Okay, if we don't turn around, it's just gonna be a dumpish day. And we got previous day low. This is what I was looking for yesterday. Please look up Bloomberg. All right, I'll look that up. Here, matter of fact, I'll go ahead and put it in so I can remember. Of course, man, of course. Yeah, I looked at after the stream. I'll look that up and see what that's about. I'm in limit order at 2688. 2688 for shorts or longs. Wait, 2688. Shorts. This order block could potentially push us lower, but it's extremely unlikely that the data high goes untouched with equal highs here. But we can see if this order block here is going to support us. I'm not going to say you're going to be wrong quite yet. But we kind of like immediately inverse this gap here. To me, this right here is bullish. We got an immediate reaction, and we immediately inverse first presentation, and we're using this as quote unquote support here. And we're below all the key opening times as well. And that's a big stop loss. Yeah, I'm not gonna lie. I'm bullish. I like longs here, especially if we close above. Yeah, so we close above that. I like longs. Anybody want to take longs? Is a good spot for longs here. Make sure you use a PD rate though. Don't just enter. Use something so you know why you're taking longs. Break even will be here, and target will be here and here. I don't think we have anything higher. Nah. So target would just be Asia and data high. But the best entry for the longs would have been off the IFVG. Yeah, it's getting a little bit late now if you didn't take it. GSX. Just copy trade. He said he was at work. But yeah, I would I wouldn't just like don't get me wrong, I would copy trade so you can make money, but I wouldn't just blindly copy trade because then you just won't know. Because if I lose, you're going to be mad because you don't know, because you didn't know what I was doing, or you didn't know the reasoning behind the trade. Oh my goodness, we're just flying here. These I'm not gonna lie, this is a beautiful IFVG trade here. Beautiful IFVG trade. Yeah, from there to there, 200 points in 3 minutes. Here we got a market structure shift here. So let's see if we get a little bit of a retracement. And then second entry for longs would be off the retracement. Oh, that'll be all the way down here though. Let's see what happens when we get down here. We get down here, I'll switch to the 5 second and look for a long entry. But I don't think so. I want to kind of just see us just go. I don't want to see us retrace. And I want to see us just go so that way we can turn around here and continue lower. Oh, dang, to the tick. Hey, bro, Breeze know a little bit about everything when it comes to bottom and top ticking. That boy knows standard deviation, high time frame, PD rate, rejection model, Axel model, Powell model, Shinobi signals. I was on TikTok live last night and Shinobi caught a crazy bottom. He caught a crazy bottom tick last night. Hell no. I never used standard deviation. Like the only time I used standard deviation was when we were in all-time highs, so I could get targets. That's the only time I ever used it. I never really like tested it and everything like that. I feel like standard deviation just proves that the market is an algorithm. Like you mean to tell me that every single day the market uses standard deviation and all the buyers and sellers in the world are all looking at standard deviation and turning around? Like that just proves the market is an algorithm. All right, I am going to be looking to take shorts from here. These were great loans, so hopefully somebody took them. But these were great, excellent, amazing loans. We also got bearish S&T with the ES, and this will be inside of the macro as well. So we could get like the A plus shorts ever. Wait, I'll tell you why I wrote that in my Notion project. Put that in my Notion project. Oh, the algorithm thing. Are you still there? Would you come back? Also, everybody after the stream today, make sure you go check the giveaways because they did put some more entries, like some more ways you can get more entries in the giveaway. Come on, don't tell me we're gonna leave Asia. Let's go grab it. Does the giveaway link work? Because I think somebody told me it wasn't working, and Errol fixed it. Well, he sent me where I can get what's going on. I took loans. Micro just got out $30. Dang, bro, you got in super high. Just made a quick 630. W trade key. W trade. Yeah, I'm not gonna lie. That was real easy loan. That was only 5 minutes. A 5 minute loan. That's crazy. Yeah, 5 minutes and 150 points. Standard deviation works in trading because it measures how far price deviates from its mean. This is the closest practical possible to volatility, liquidity, imbalance, and resisting stress. That boy Breeze know a whole bunch of everything. Every session is like connected. I feel like trading is I feel like trading is just kind of crazy. Like it's actually crazy to think about how trading even works. But what in the world? This isn't okay. Now longs did give an entry, but the shorts, like I was hoping we would go take out this first. You said you're looking for shorts, right? Yeah, but off now in this scenario, like I'll only be looking to take shorts. I want to see us get up here. Like I want to see us go take out this. 'Cause taking shorts from here will kind of be chasing. Unless we start getting down below here, then retrace with something like that. But taking shorts from right here kind of can go both ways. I kind of think we're going to go higher from this gap here to go grab this here. So
So price tapped into a bearish 1 hour fair value gap.
oh, I forgot the mark.
And that's also the reversal. I had it mapped on my chart.
Oh yeah, we do have a gap there. I didn't mark out any buy side. I didn't mark out anything on the buy side. Cause I was looking for sell side. I definitely thought we would have took out Asia though. We got that close and then failed to take out Asia. Market is super volatile though. Like that's kind of boom, 150 points, boom, another 150 points. Well, 200 points and now boom, another 100 points. We're also inside of the macro as well. As of right now, it does look like we're going to go higher. See if we close below this gap here. Oh, wait, no. Matter of fact, that's wrong. I mean, let me pull out the dealing range actually and look at it. Oh no, this gap right here is in the discount. So yeah, from here I'll be looking to go grab this here. See if this woman in here is gonna hold. And kind of looking iffy for that 1 minute there. See if we're gonna. I'm looking to see if we're gonna get above 745s. So looking to see if we're gonna get above basically this candle's high. I am on the 5-second chart. Right now we're respecting that, so I could 100% see this right here get taken out. All right, we got above there. And I got my limit order set. But I like you back.
Order filled.
Actually, I'm gonna go stop loss behind here. How many points is that? No, that's too big of a stop loss. I think we just bottom ticked that. Let's see. All right, I'm looking at this wick here. Oh my goodness, I just bottom ticked that bad guy to the tick. Oh my goodness, that boy might know something. That boy might know something. Yes, I bottom ticked that to the tick. We get back above 780s and I'm going to break even. Where's your limit order set for? My limit order was set for 729. Now it's gonna if I ever mention anything about a 5-second entry, if you can't give it your undivided attention, just ignore it because it's way too hard to trade 5-second chart. It's too hard to trade the 5-second chart and try to and not be fully attent. It's just too fast. I want to see if we get above this here, this 50%. No, don't do this to me, NASDAQ. Don't do it to me. I'm in longs right now. I bottom ticked it, but right now we're back at break even. I'm looking to see if we get a closer above midnight here. We get through this high here. All right, that's break even there. We're gonna sell one minute, go ahead and lock in some profits. All right, now free trade. Yeah, if I mention like the 1 minute, yeah, you can copy that. But if I mention the 5 second and you can't be fully attent, you might as well just go ahead and skip it. It's way too fast, way too volatile, and the 5 second is just hard to trade because that was fast. Like the moment I set my limit order, the 5 second literally dumped right down to it. And I'll see if I can show my screen, but I literally bottom ticked it. So here is my trade of 8. I have my limit order set here and literally bottom ticked on the 5 second. And that's why I like the 5 second, because if you understand narrative, like this is how those bottom tickers and top tickers are doing what they're doing, because they understand the narrative behind the trade. I'm gonna trail my stop loss up just a tiny bit. Any other way, I swear. No, don't stop me out. Let's see. I want to see us respect this 50% here. We closed above this wick, so I like to see us. We actually also tapped into this 1 minute, and we're expecting the CE of it. I love you.
Stop filled.
Oh,
Order
I
filled.
got filled too many orders.